All right, guys, let's talk about gaps, gap fills, how to identify them, how you would trade them, just sort of some context around what happens in the market that causes a gap up or a gap down, and why they're attractive to us as day traders. So, if you don't know what a gap is, just quickly, a gap is when the market makes a move overnight from let's say we close here, for instance, and then open down here, thus creating this gap zone, right? Gaps now in the current market that we're in right now, where the market is just basically selling off, and the equity space is kind of just following suit. We're not seeing stocks that are really kind of moving organically and doing their own thing. They're kind of just following the overall market. For me, if I'm trading gaps, I like to just trade them on the indexes or the indices like SPY or the Qs. And what you'll notice is when you chart out gaps, all you do is you chart the top of the gap. So if I were to chart this new gap that just formed today, I'd put a line at the top and a line at the bottom. And these lines, these gap levels will act as support and resistance. And I guarantee you, if I scroll left, and granted we're at a place where we haven't been in quite some time, I want to say since maybe June. Actually, yeah, since June. You'll notice the levels get played to, right? I mean, gaps are a phenomenal way for you to practice just charting support and resistance. If you're having trouble identifying what should be support or should be resistance, I did do a video on how to chart that stuff as well. But gaps are a phenomenal way for you to chart out things where you see gaps everywhere, and then back test them and see if they're being filled, what they look like moving forward. For instance, this one hasn't been filled because it just formed today. Once the market begins to make a move up, you'll notice that this level and this level will act as pretty good, solid resistance. If we can get above this, we're likely to push right to this, right? And that would be your gap fill. And this is why they're so attractive to traders in the market, because gaps usually fill themselves. So like, for instance, right here, let me circle this gap for you guys so you can see it very clearly. And then I'll draw a line at the top of the gap, and we'll draw one at the bottom of the gap, like such. And what do you see? You see the gap down. You see price chop around, start to move up, get into the zone, gap down again the next day, and then feel that gap right inside of here, push up, it becomes support, and then we push right up and feel the prior day's gap, right? And then that gap begins to act as tough resistance. Look, we have FOMC that took place the days after, and look where the market reversed at, right at the level where the gap was at, right? So it's reasons like this why gaps are so important to us as day traders and why we need to identify them, because the market will play to those levels. Even if it just bounces or it just kind of consolidates at those levels. Look right here. So I'll circle so you can see there's the gap, and look what happens that day right inside of it, right? This gap also coincides with a reversal that took place at this point, but you get the idea. So when you see a gap, chart it. Gap right here. Another gap. What do you see? Gap down. We come down, we consolidate, we push right up into that gap, we consolidate inside of it, and then, I mean, it's already filled at this point, and then push up again, right? Gaps love to be filled. Look right here. I'm just going to circle so you can see the gap on the left side of the circle, and then the fill point right here. This is why gaps are so imperative. This is why you must chart them. Now, if you have extended hours on, right here on the bottom right corner, if you're on TradingView and you click extended trading hours, you're not going to really see very many gaps, right? Because it's trying to gather as much data as it can pre-market and some of the after hours stuff. So you can't really see it. So in order to effectively chart gaps, you need to be on regular trading hours. And then you can see the gaps everywhere from one day to the next, right? And all it is the market closes at 4 p.m. and then opens at 9:30 in the morning. So you'll see this candle, well, for me, the market opens at 8:30 and closes at 3, but you'll see this candle, I'm on a 5-minute chart. So this candle right here is closing at 14:55, right? So 1500, so 3 p.m. And then this next candle is opening at 8:30 in the morning, which would be 9:30 for the regular market hours, thus creating the gap. And all that's happening is that, excuse me, futures are trading overnight, right? Futures trade, 23 hours a day, 5 days a week. So if futures are trading all night and they make a move in the overnight session, the market will open relative to where the S&P 500 would be, right? Where ES would be. And that's what SPY will do. So it's great. It's one of the first things that I learned when I first started trading. Was someone taught me about gaps. I didn't really quite understand why the gaps would get filled. And you have to think, it's just an attractive price level. It has to have been an attractive price level in the past, somewhere in the past. If you chart out a gap, there's a very high likelihood that at some point in the past, that area, that price acted as very tough support and resistance. And that's why the market would gap at those areas, right? So I learned it, and then I started charting it out, watching it, and I was kind of astonished at, the fact that the market would play to those gaps. Like, it just would. And so you got to think, if people are noticing these gaps, they're very attractive price levels in terms of where people think the market could go next. Then yeah, it would make perfect sense as to why the market will push into a gap and then reverse off of it. Or even, I think there was one day this week where we pushed right to a gap and then the market didn't quite get into the gap and short and dumped right off of it. I'm trying to see where that is. So here's a gap. So we'll chart this gap out, and we can chart it at the very top or just the wick. It's just, where do you see the most price at? Where do you see price, the most area of particular confluence around that level? And you can see we get right into that gap and then reverse off of it. It doesn't quite fill it, right? So it doesn't work. Nothing in trading will work every single time. It's just simply an area of interest. It's simply, this is where price can get really attractive at, right? Usually when you get into these zones, though, you're going to fill the gap. And it does end up filling the gap. It just happens the next day, right? You see it right here. So you can also see, what I'm trying to show you is, you can also see a reversal off the bottom zone, or it can act as support. If it's gapped, market's gapped up and we're coming down into it, it can act as support and the market could continue higher. So nonetheless, the idea behind gaps is just simply chart them out so that you can understand that there's a very, very important price level built into that area, right? That's really all, I want you to be looking for in terms of gaps. I mean, look at this. I'm going to chart this one out for you guys so you can see it. And this is, I'm really just freestyling this. I didn't do any prep work for this video because I have that much confidence in how organic this can be. So here's a gap up. We push up, we come right down, and we fill the gap, and it bounces at the top of the gap and then reverses again. I mean, it's a perfect illustration of how price reacts around gap levels and, around support and resistance levels. So you see this. I want you to see this very clearly. So gap up, market pushes up, we come right down into the gap and push right down to the bottom of the gap. We fill it. Look at the body of the candle. The body of the candle is holding the gap. You see that? And then we push right back up to the top of the gap and then sell off again. Nonetheless, I mean, you see the levels playing to it. If you were short here, maybe you have, I don't know, 10, 15 contracts or something, if you have a nice size account, and you trim some of your position as you're moving into it, and then you get your gap fill and you fully exit your trade there, right? It's a great way to trade. It's easy. They're easy to identify. They're not overly difficult for most people. Another gap. I mean, I can do this all day. Like, look at this, right? I mean, look what happens inside this gap to the left side of the circle. And then look what happens the day we open up over here, right inside the gap. And the market pushes right up and fills this gap and then continues up. So my advice is just, put your chart on whatever time frame you're comfortable with. Scroll back, find the gaps, chart them out. Especially, on the days where, the price is relative to where you're currently charting, like such, in other words, this is today, September 23rd. So what I would do is chart the top of this gap and the bottom of this gap. And then come Monday, today's Friday, come Monday, if we're near this zone and pushing up, I'm going to look to get a gap fill. It's a pretty big gap, for the S&P 500. It's a fairly large size gap, but it's bringing my attention to the chart in terms of these price levels, right? It's attractive to me as a trader. potentially could be a very nice play to the upside once the market starts to show some buying and we push up. So just an area that I would identify as key, whenever I'm doing my technical analysis. So I hope you guys like it. Also, here at Steady Trades, we offer custom-made indicators, and one of the custom-made indicators that we offer is actually a gap fill indicator. And all it does is you turn it on, and it will shade the areas, and you can pick the color, whatever you want. It will shade the area of the gap, just to help you identify it as a new trader, and you can see it very clearly. Yeah, so gaps. I hope you like it. I hope that you'll start to chart them out and respect them. At first, like I said, I thought it was kind of corny, but it really isn't. It does work, and it must be respected. So try charting it out. Hopefully, it'll pay you some money in the future. All right, guys. All right, have a good day. Thank you.